Virgin Galactic may be the company that finally commercializes space travel for the common person, or it might just be a giant marketing scheme that has no real engineering legs or business model. In this video, I'm going to try to figure out which is true. Hey everyone, and welcome to FinTech. And in this video, I will not just be talking about the latest news with Virgin Galactic, though I am going to talk about that as well. This is going to be a full-on deep dive into the company, talking about the company's history, how they are currently performing, and what will need to happen for them to go from a $7 billion company to a $100 billion company in the future. As always, stick around until the end of the video to see whether or not I decide to invest in this stock. Virgin Galactic was founded in 2004 by legendary investor and entrepreneur Richard Branson. Branson had previously built his multi-billion-dollar fortune through multiple different businesses, including Virgin Records and Virgin Atlantic. His success in wildly different areas of business have led some to call him the original Elon Musk. And similar to Musk, Branson has lofty goals and aggressive timelines that he wants to achieve with his companies. According to a BBC article from 2008, Branson originally intended for the maiden voyage of Virgin Galactic to take place in 2009, but this date was continually pushed back due to setbacks, including one very high-profile public in-flight failure of their Spaceship Two aircraft, which actually ended up killing its co-pilot and injuring its pilot. It was not until 2018 that they finally achieved their first suborbital space flight at a height of just over 50 miles, which was just high enough for the US to consider the passengers to be astronauts. They currently have two types of aircraft in production. The first is Spaceship Two, which is essentially an airplane that's built for space, with two bodies to hold passengers, as well as a rocket engine to propel it past the atmosphere. And then the other is White Knight 2, which is similar except that it carries a physical payload which it can use to perform an in-air launch into outer space. While Virgin Galactic now owns both of these aircraft, the engineering expertise for building and designing these crafts came from a separate company called Scaled Composites, who later sold their partial stake in the aircraft to Virgin Galactic before they went on to be acquired by Northrop Grumman. I think this is important to note because Virgin Galactic is not an engineering company per se. It's more of an aggregator of different technologies that it either licenses or helps develop by investing in more engineering-focused companies. So that's the background, but now let's look into how Virgin Galactic is currently performing according to their financial reports. Looking solely at Virgin Galactic's financial metrics, things don't look that great. For example, the company's revenue has essentially decreased every quarter since 2019. In March of 2019, they had over $1 million that quarter. In the next quarter, they had just over $600,000. In the next, over $800,000, and then that dropped to just over $500,000. In 2020, it's been substantially lower than that, with the March 2020 quarter having just over $200,000, and the two quarters after that having $0 in revenue. Finally, the last quarter for 2020 in December has yet to be announced. Similarly, their earnings per share is all over the place, going from negative 0.22 to negative 0.23 to negative 0.26, all the way to negative 0.38 in December of 2019. That improved slightly to negative 0.3 in March of 2020, and then negative 0.29 in the next quarter, but then shot back up to negative 0.35 in the most recently reported quarter. Now, if we were just evaluating this company like a traditional company, this would obviously rule it out for investment. But I don't think that we can use traditional financial metrics to evaluate a company like this. Most companies make and sell a product, and then over time they sell more of that product, diversify into other areas, and slowly grow their revenue that way. Because Virgin Galactic is operating so differently from a traditional company, I struggled to try to find a good way to value it until I realized that Virgin Galactic can actually be valued similar to a biotech company. Medical tech companies usually don't make any money at first while they're developing new and innovative medical technologies. Instead, they are valued based on how likely each of their products is to become successful, as well as how profitable that product would be if it can do everything that they say it can do. Now, with medical companies, this usually means passing testing and regulatory hurdles. But with Virgin Galactic, it's PR and engineering milestones such as finally reaching outer space and eventually actually flying with real customers in space. So currently, there's absolutely no stability in their earnings. Everything depends on betting that their technology will pay off. Because of this, a big part of Virgin Galactic's value right now is tied up in their brand. According to a 2019 annual report, Virgin Galactic's customers had already placed 600 deposits totaling $80 million. representing potential revenue of $120 million. Because of their strong capabilities in community management, they have been able to retain those deposits even though those deposits are fully refundable. Additionally, the majority of those deposits weren't from them reaching out and trying to sell to somebody. It was from inbound requests to the companies from people actually reaching out to the brand. So clearly there is interest in the service that Virgin Galactic is offering, assuming they can get it to work. And clearly the market is expecting Virgin Galactic to be able to deliver, with estimated 2021 revenue of $20.27 million. This is 10 times the revenue they earned in 2019 and possibly as high as 20 times the revenue that they earned in 2020. Now, Virgin Galactic does traditionally underperform analyst estimates, but even a slight underperformance here would represent a huge amount of growth for the company. Now, I did say that I would talk about recent news events around Virgin Galactic, and one major piece of news that has come out recently is that ARK Invest, one of the fastest growing ETFs in the world, which made its name by investing in companies such as Tesla and Square, decided that they would be launching a Space ETF. This is an ETF made up entirely of companies that are pursuing space opportunities. Investors assumed that this would benefit Virgin Galactic, and so a bunch of them all piled into this already very volatile stock and drove its price up 30% in the matter of a few days. Now, ordinarily, this would be a huge warning sign for me. If a company's stock price is being driven up simply because someone else is buying it, the stock price isn't increasing because of the underlying value of the company. Buying in would essentially be putting money into the company in the hopes that I could dump it onto someone else later at a higher price. In my view, the company is no more valuable than it was a month ago, it's just 30% more expensive. But once again, Virgin Galactic is not a traditional company. We're valuing it similar to a medical device company. And in those kinds of cases, a relatively small fluctuation of 30% is less important when you consider the fact that the stock price could double overnight after a successful test flight, or it could drop in half if they experience some kind of accident. The biggest question will obviously be, can Virgin Galactic put customers into space? Now, Richard Branson has said that he plans to be among the first of the passengers to actually go out into outer space, so he at least is confident in the technology. But probability of success is only part of the picture. The other question is, how much will the technology be worth if it is successful? Well, let's look at some numbers. First off, we know that Virgin Galactic has over 600 deposits worth over $80 million already on their books. While that may sound like a lot of money, it's essentially nothing compared to their market cap. They have essentially $80 million in deposits, but a market cap of around $7.4 billion, which is over 100 times their earnings. You can compare this to a normal company valuation of around 12 to 15 times their earnings. In order to grow into this valuation, Virgin Galactic will need to make profits of around $617 million per year. And remember, that's profits, not revenue. If we assume a very generous 70% operating margin as assumed by one of Virgin Galactic's largest shareholders, that would mean that they would need revenue closer to $880 million per year, equivalent to around 3,500 flights at their current price. Now, granted, that number of flights would probably drop if Virgin Galactic raises their prices in the future, which they have talked about doing. Achieving this amount of revenue could be a problem, as UBS Bank estimates that the space tourism market will be worth as much as $3 billion a decade from now. This means that 10 years from now, Virgin Galactic would need to control 30% of the market just to be worth what their price says they're worth today. That also means that in order for Virgin Galactic to grow to 10 times its current valuation without being overvalued, it will need to bring in around $9 billion in revenue, 3 times greater than the estimate for the entire space tourism market a decade from now. Because of that, I don't think space tourism is where Virgin Galactic will make most of their money. It will help them get off the ground and generate some good marketing for them, but the real opportunity here is space travel, or more accurately, travel via outer space. The idea here is that someone would board something similar to a plane, which would fly up to a high altitude and then would launch another vehicle into space. Because the air pressure is so much lower in space than on Earth, you can travel at significantly higher speeds without having to worry about the same wind resistance that you would on Earth. This is kind of similar to Elon Musk's Hyperloop, except instead of needing to build your own vacuum chamber, you just take advantage of the vacuum in space. This would substantially cut down on travel times, potentially allowing you to travel huge distances like New York to London in less than an hour. UBS Bank estimates that the travel via outer space market could be worth as much as $20 billion 10 years from now. A large enough market to accommodate Virgin Galactic, Blue Origin, some other competitors, while also giving Virgin Galactic enough room to 10x in size. The real issue with this market is that Virgin Galactic will need to compete with a much better established company with a proven engineering track record and a rock-solid business model. Elon Musk's SpaceX. SpaceX has already made clear their plans to use point-to-point travel via outer space and have talked about how they could take a flight that normally takes 15 hours from New York to Shanghai and complete that trip in as little as 39 minutes. This will absolutely cannibalize the long-haul air travel market, and so there's also the chance that traditional airlines will also try to get in on the action. Now, a lot of articles that I've seen mention space travel talk about it in the same way that they would talk about the airline industry. I actually see a much larger potential vision where these space companies act more as the platform for outer space. Think of Amazon, which owns both the shopping platform and Amazon Web Services, which are each multi-billion-dollar businesses, which allows smaller multi-million-dollar businesses to run on top of their platform. My hope for Virgin Galactic is that their technology would eventually act as the backbone for outer space, allowing other companies to make use of their space platform to access areas that they wouldn't have otherwise. This would essentially guarantee them a way to scale their technology without continually sinking cash into expensive assets like you have to do in the airline industry, which, as I've mentioned before, is one industry that I would never invest in. So what am I doing with my money? Well, I will not be investing in Virgin Galactic, at least in the short term. The fact that the stock price is going to be driven so heavily by events that are completely outside of my control and ability to predict just doesn't fit into my portfolio. That being said, I do not think that Virgin Galactic is necessarily a bad investment. After all, I also don't invest in medical tech companies, and those kind of investments can be wildly profitable for an informed investor. If you are considering investing, there's a couple questions that you want to keep in mind. What is the total addressable market for the company? How much money could they make assuming everything goes according to plan? Will they get repeat customers? Is the idea just to fly up billionaires for a once-in-a-lifetime experience, or is the idea to get repeat customers who will continue to use your service in the future? What other services besides space tourism and maybe point-to-point travel can Virgin Galactic get into? If you can satisfy yourself with answers to these questions, then I think you should absolutely go ahead with investing in Virgin Galactic. So let me know if you'll be investing in the comments. Make sure to like and subscribe if you enjoyed this video, and I'll see you next time.